Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, June 6, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We got plenty of stuff on the docket. We have an array of things to discuss and look at, even from the daily chart perspective. Let's start with the trend line. She's still hanging around the trend line, closed today above the trend line. When you go back to an intraday chart, you can see she closed slightly above the trend line. But what's interesting is even in the aftermarket session, still flirting with the trend line. And you could see here in the last few candles of the day, they were fighting the trend line. The market, Mrs. Market, knows about the trend line. That's item number one. Item number two is, remember something that I discussed last night, which is she's going to come back and run a test of the most recent breakout area. And I think I finished the sentence with, I'll eat my hat if she doesn't. The blue trend line is that number. It's 533.07. It's the former high. And what did she do today? This afternoon, she came back to run a test of that place. We'll issue a funny how that works. So now what we can say is, as long as she's above the former breakout area and above the trend line, there's nothing wrong. She's bullish, above all the moving averages, above the trend line, above the last breakout area. Everything is bullish until proven otherwise. When does that change? That's going to change once she recaptures on the south side the most recent breakout area, also very close to the trend line, but we'll use 433.07. We'll use the lower of the two. If she starts trading down there, closing hourly, closing daily below there, that will be a recapture. That will be an attempt at a breakout, but not a breakout until she sustains price above, at least for a few days. What else do we have on the board? We still have waning velocity. I said it could last throughout the end of the week. Here we are. We had a nice rally yesterday into a period of waning velocity, which means that the market should find resistance, and it's not based on a number. Waning velocity, we talked about it last night. It's formula driven. It's based on time. It's based on distance traveled and time. Doesn't work 100% of the time. It works the large majority of the time. So then you look forward to say, well, what could spark the market? We have a phony jobs number tomorrow on Friday. That's one thing. What else do we have? Well, next week we have a plethora of stuff. We have the Kabuki Theater FOMC interest rate announcement. Fed meets Tuesday, Wednesday, I believe. Then we have, or amongst that, we have the CPI and PPI data shuffle. All these, including tomorrow, the next four things can be market-moving events. They can be used as the excuse to move the market. We don't care what the CPI numbers are. We don't care what the PPI numbers are. We don't care what the phony jobs number are with a margin of error of 3% or whatever the number is, the margin of error of 150,000 jobs. It's all nonsense. And then they revise the reports for the next couple of months. Nobody talks about the revisions. It's a joke, but the market hangs on it and can be used as an excuse. That's all we care about. We had some interest rate movement in other countries. We had Canada yesterday. We had the ECB, the Euro complex, today. They lowered interest rates by 25 basis points. We'll call that a global coordinated effort with the Fed meeting next week. There's no accidents or coincidences that those two entities lowered rates leading into the Fed. Is that a hint of something coming? Are we going to anticipate the Fed lowering rates, or at least giving the impression or hint they will lower rates sooner than later? I would suppose that's what Mrs. and Mr. Market is looking for, meaning the market participants. If you don't hear that, will she be disappointed? We don't know any of the answers to this. These are all the mental masturbation things that occur leading into these events. How's the market going to react based on X, Y, and Z, A, B, and C? And the reality is whatever we think is going to happen generally won't happen. It will be something different than we originally surmised. So therefore, my take is, don't worry about it, just react to whatever they do. Guessing in front of it is somewhat of a fool's game. It's like guessing on an earnings report. Apple's going to report earnings. Which way is it going to go? Let's buy a position, let's sell short a position, and let's take a roll of the dice. That's not really the best course of business. Apple comes into a support number, comes into a resistance number. That's a different circumstance altogether. Those are two different things, not to be conflated. Two different probability scenarios. One's a flip of a coin. The other one, as far as I'm concerned, is nowhere near a flip of the coin. No change on the weekly chart. She's bullish, bullish, bullish. Just to reiterate from last night. Might as well bring up crude oil one more time. I gave this out to the live room yesterday, 72.78 and 72.60. We talked about it last night. Here was a follow-through day all the way up near 76. If you do the math, it's simply over $3,000 per contract in 2 days. Each dollar movement in crude futures equals $1,000 in either direction, up or down. And therefore, you got over a $3 move. That's the math. Same routine in gold, live room. Talked about it yesterday morning or a couple of days ago. I forgot when it was. This was on Tuesday, and it was 23.37.60. Here we are at 23.90 and change. How you doing? Live trading room, members only situation in real time. What about inside the numbers today? Here's the 0 dark 30 commentary early in the morning before most get up. The overnight session was rather quiet. And look here, first thing this morning. What we do know is they'll be back to run some tests at the most recent breakout area or areas. What we do know in bold, 6 a.m. this morning. And then I give you the numbers. Here's the trend line. Comes in at 534.30. In the second place is the most recent breakout area, 533.07. It pays to know your numbers. This way you're not surprised what the market's doing at the time. You know what she's doing. You're expecting it to do certain things, and then once reached, you're expecting them to at least complete the current thing. Everything has a beginning and an end. Therefore, running a test of 533.07 completes that objective, and then what happens from there? Either she goes back in the other direction or eats time off the clock and continues on. But generally speaking, whether it's resistance or support, this is something I teach in the live room each and every day, or almost each and every day. The first order of business in resistance or support is she stops going in the direction she's going. Then the decision is made. When one thing ends, a new thing begins. Let's see what else we have as we scroll up and the day starts to get underway. What's the scoop? What's the early scoop? At 9 o'clock, there's a big early scoop. Gave the whole schematic. You can read the notes, pause the video, go back to the chart, and certainly double check the work. Let's highlight a few things. 535 and a quarter is the first place of possible resistance, give or take. There it is. We're on a 5-minute chart. Right of the vertical is today's activity. 535.25 was where they went to, spiked it a little bit, and had a pullback in the other direction. That was our first trade of the day. It was a short opportunity, scalp with potential. We're looking for base hits that can turn into more. Base hits, you pile them up, they put you in the hall of fame. They can react back down in the other direction from this place. If, you have to know both sides, we're the umpire calling balls and strikes, at least I am. If they start pushing above, the next zone would become magnetic, yada, yada. And it's up higher. They never got there today. We don't have to worry about it. Now, check this one out. All right. What if they run an early shakeout operation or a shakeout operation at any point in time? Is there a bounce back? Long trade scenario. 533.75 to 532.90 is such a place where Mrs. Market should find support and a bounce back situation. There's the first one. 533.75 is your horizontal line, the blue line, the middle one. They spiked it a little bit, rallied back, gave you a base hit if you wanted it, if traders took that trade later in the morning, early afternoon. And then what happened? Then they proceeded down to the second number, 532.90, spiked it by a few pennies, ripped it back up in the other direction, got above the trend line later in the day. It pays to know your numbers. That was pretty much the whole day. Market opens, here's the trend line, 535.25 is overhead resistance. If they stay below 535.25, the door is open to fall back toward the trend line, which they did. By 9:57, for those that took the resistance number short, they've provided the minimum required base hit. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here each and every day. What you need to trade in the S&P using options on the SPY, leveraged exchange-traded products, futures, micro futures, options on futures, it doesn't make any difference what it is. I want to talk for a second again about the TLT or the bond market in general. So think about this for a moment. Everybody just a few weeks ago was talking about the Fed's not going to lower interest rates, higher for longer, all that stuff. We're in here buying the higher low. That's us right there. Which means if the bond market rallies, interest rates are going lower. There is a direct correlation between bonds and interest rates. They are inverse one another. Now, think forward. We're in the trade already thinking everybody's wrong. All of a sudden, the bond market starts to rally, and here comes Canada and the ECB lowering rates. The bond market was sniffing that out ahead of time, and we sniffed it out even before the bond market sniffed it out. I think you ought to put that one in your pipe and smoke it. You think this is easy? This took years to figure out. And once you get it, you realize the market does the same stuff over and over and over again. Nothing really is different. Doesn't matter what the chart is. Doesn't matter what the name of it is. Doesn't matter if it's a weekly, monthly, daily, quarterly, annual. It doesn't make any difference. The only difference is the speed at which the move happens that you're expecting based on the time frame of the chart. If you're looking at a weekly chart, you're not necessarily expecting the move you're expecting in an hour. Traders in the live room start to get a handle on this stuff. Light bulbs are going on each and every day all over the place. It's really bright as white in there. Now, what's going on over in Camp IWM? We had some divergences working. All of a sudden today, she's down again. Divergence is back on the table. Was yesterday a one-day wonder fake-out operation in the northern direction? Or will we see some follow-through over the next few days? Maybe the data release stuff, the phony jobs number, the Fed, CPI, PPI, all that stuff. Maybe that will be the catalyst for a new leg higher in everything. That's certainly possible. But what we do have at present, and we take the market at face value, is a chart divergence in the IWM. All in all, it was an inside day to yesterday, meaning the high today and low today was inside of the high and low from yesterday. So there's a little bit of indecision there. Call it a little bit of a pause situation. We'll see if she moves them on the phony jobs number. What about the folks down at the transportation department? Certainly looks different on this chart than anything else index related. Below all the moving averages, the trend is your friend. She is down, and she will be down until proven otherwise. How does she break the chain? She's got at minimum get above the high over here from the 3rd of June. That's the bare minimum, but there's more work to do if she can. Not down a whole lot today. Little less than 0.3%. We're not going to really call that divergence from the S&P. We're just going to call it down a little bit. She's weak on the chart. Again, we could get a lot of movement over the next several days in the market. It's the air quotes they're waiting on, whether it's the phony jobs number, whether it's the Fed, whether it's the CPI or PPI data shuffle, anything under the sun, they're waiting on something. Qs were flat-ish today, down 16 cents. That's flat-ish. No real change, no new information in the Qs. They have yet to test their most recent breakout area. They will. but there's no new information on the Qs. We could simply move it along. You go over to the XLF. She was flat today also. Could make a case she's building a bearish type of situation. We could make the case that the XLF is building a bearish situation from yesterday, but since she was down 2 cents on the day, we're not going to make heads or tails out of that. What we're going to do is simply move it along and say there was no change today, no material change on the chart. She was flat. Did have a pickup in volume though. My eye does get drawn to that. So that's interesting. It's not telling us directly anything just yet, but we'll see if it's a clue leading into the next few days. Remember, when we looked at JPM, which is the biggest, baddest global banking stock the market has to offer, this thing was not participating in any of the recent rally. Down a little bit today, not much, but you could see here just holding up the last line of defense, 50-period moving average on the daily chart. Give that up, and you're looking at 91, 92 bucks pretty quickly. Something's going on under the covers of the banking stocks. You want to directly attribute it to lower interest rates, squeezing margin, higher bond market, bank stocks falter. It's possible. It's a story. I'm not sure I'd go with that. I think there's something else brewing. What about Smashmouth? SMH, Philadelphia Semiconductor Index. What did they do today? Came back to retest the most recent breakout area. Sound familiar? You might want to write this stuff down because all charts act and react the same way. And as long as they're above that number, 250.85, then she's in the most bullish position. Even though it was down $2 today from the open, no big deal. Above the most recent high, again, 250.85, and she's just bullish, period, full stop. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.